happening in the stock market. We're watching a global market sell off after U.S. stocks last week had their worst week in 2 years' time. Taking a look at futures, we do have a down market. Dow's off 68 points, but it's not down the 150 that it had been earlier. In fact, the NASDAQ completely unchanged. So what should investors expect when the opening bell rings? Starting off a new week, we bring in Adam Johnson, founder and author of Bullseye Brief, and David Nelson, chief strategist with Belpointe Asset Management. Hey, guys, good morning.
Good morning, Lauren.
You know, David, I heard on, I heard for years now, there's this Wall Street adage, the market doesn't like to sell off on a Friday, so the selling really happens on a Monday sometimes. That's when they finish things. We're not really seeing that today if you look at U.S. futures.
You know, I would say look at the close today. How we opened is probably just problematic. You know, it's probably follow through from last week. You mentioned some of the problems right at the top of the show, you know, the rising interest rates. And that has investors concerned because as interest rates rise, multiple expansion goes out the window and valuations start to become a concern. However, we don't need that anymore because right now the economy is strong, the fundamentals are strong, and it's not just earnings, sales are growing as well, and that's pretty hard to fudge. Apparently, we're selling a lot more widgets.
Adam, can the market and can the economy handle 3% interest rates if that's the direction we're going in? And at what point, Adam, does rates become restrictive?
Oh, absolutely. Not only can the market handle 3%, the market can handle a whole lot more. Interest rates are still abnormally low. But the fact is, you know, people are working. I mean, unemployment is only 4.1%. That's incredibly powerful. Corporate earnings are rising, well, I think as high potentially this year as 18 to 20%. That's incredibly powerful. The economy is so strong right now. GDP officially is 3.1%. I think it's on its way to 4%. And I don't know if you saw last Wednesday that the Atlanta Fed said it might actually go to 5.4%.
Oh,
I couldn't believe they
that.
said that.
Yeah.
5.4. So, you know, the fact is, if you have people who are working, companies who are profitable, an economy that's growing, that's all reason to be in the stock market. And certainly that's a lot more powerful than rates rising to 3 or 3.5%.
So what exactly changed the narrative? Because you can also talk about wage inflation that we're starting to see, and we saw that in the jobs report. Wages up on an annual basis 2.9%.
Yes.
Biggest gain in 8 years, David. This is awesome news, highlighting everything that Adam just spoke about. What changed the narrative that we'd sell all of a sudden?
Every now and then you get something like this where good news becomes bad news, and that's really what happened on Friday. We had a good jobs number. The market was pretty stretched. Look, reversion to the mean is a pretty powerful force on Wall Street. You know, coming into the start of last week, we were over 12% above the 200-day moving average. That's pretty stretched. So the fact that some selling took place, I think it's a concern. It's uncomfortable. But if you're like me and you're on the side of the camp that believes that this is either a pullback or at worst a correction in an ongoing bull market, then you do one of two things. If you don't have cash in this market, start to add it. And if you are fully invested like me, it's a chance to upgrade your portfolio, get rid of some of those losers, and maybe buy into some of those names you missed on the way up.
And as we wrap this up, Adam, Amazon, it seems to me they're starting to act like a safe haven, all-time high for that stock on Friday in a down market. Is Amazon the new safe haven out there? Is it the new gold?
Is it the new gold? I like the question, but I tell you what, it's certainly the new everything, right? I mean, there's nothing that Amazon can't seem to do. There's no way to Amazon-proof your business, and now it looks like they're getting into healthcare, not only with prescription drug distribution, but potentially actually offering healthcare themselves, along with J.P. Morgan and Berkshire Hathaway. Yeah, Amazon's certainly a place to be. The fact that Amazon is up on an incredibly ugly day for the rest of the market gives me cause to be enthused.
All right. I like the optimism, guys. Adam, David, thank you very much.